The markets joining us now with insights is our panelist Kevin Sullivan, Head of Portfolio Management at Clarendon Liu. And we, of course, have Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour. Dariusz, let me start with you first. The stocks here are pretty flat. Europe marginally higher. How important is that Citigroup earnings going to be for the overall equity markets?
I think it will be critically important just because of the size of assets of the bank, and investors are really waiting to see how big the write-downs will be, what the earnings will be. I think we are going to have some disappointment, larger than anticipated write-downs, but the key will be whether Citigroup's comments will seem like they are putting the pain behind them, drawing a line and doing something to move forward. Even if earnings disappoint, if the message is positive, stocks could rebound.
Kevin, Brian Shackman here in the U.S. Saw a number that ex-financials, the S&P 500 earnings up about 8+%. We take away the financials, things don't seem so bad. I mean, what's your sense of appetite in the market and optimism right now?
The optimism, I think, is still pretty shaky. We can judge that by the put-call ratios that we've seen in the run-up to this in the short interest. But nevertheless, and of course, investors' risk appetite is diminished substantially. But generally in the market, the results are coming out, again, ahead of expectations in a lot of cases, particularly on the tech side. Obviously, GE is a bit of an exception because of the financial arm. But in general, I like the market here, and mildly optimistic going forward that this is a financial, obviously, issue in terms of earnings and not spreading to the rest of the companies. So obviously, earnings growth has been halved, I think, in the last few months, but it still should come out positive.
Yeah, as you say, Google doing well after hours, IBM, Intel this week, all doing fine. I suppose Caterpillar might be instructive to see whether that global growth infrastructure play is still in tune. Are you happy to invest in these stocks at these sort of values?
Yes, infrastructure has always been in this cyclical market, infrastructure is a long-running theme. And if we look at the numbers going ahead, the amounts of money needed to spend on infrastructure, particularly in the mining area and also oil and gas, then I think the story is still intact. Caterpillar has disappointed in the past. I think about a year ago or 2 years ago they disappointed badly and the stock dropped substantially. So I think they would have come out all right today. It's all right.
Dariusz, this is Christine. Commodities clearly in focus here in Asia, especially after rough rice futures surging to a new record as governments and importers apparently are rushing to stockpile because of fears of supply shortage. How problematic is this food problem going to get?
I think it's a really major issue. The most important problem will be if there is more social unrest following what happened recently in Bangladesh, for example, if the poor among the consumers decide that the prices are becoming unbearable. But for monetary policy and overall macroeconomic policy, the problem is inflation. Either the government allows it to creep up or rise substantially, or they will have to run up higher fiscal deficits to subsidize prices. So this is going to be a major issue. If they choose to allow inflation to move higher, then currencies will go up, it will weigh on exports. If they decide to subsidize, then budget deficits will move higher and yields on government bonds as well. So this will also have a negative impact on markets and will attract more capital to the currencies. So it's a really tight spot in which Asian policymakers are finding themselves.
Yeah, Kevin, let me put it to you. There's a report in the New York Times today that's not just about job losses here in the U.S. It's about people working fewer hours, and so wages are going down. If you have that, and if inflation doesn't moderate, the second wave of this whole equation not only could be inflation, but could be just the consumer just not collapse, but we could have a slowdown that could drag us again down the road.
I think that the growth has to slow anyway, if only to keep the deficits, the current account deficits and trade deficits from increasing more. The US has obviously lived off huge imports over the last, 4 or 5 years since this expansion took hold again, and has increased trade deficits and substantially. In order to bring that down, I think the consumer has to slow down, and it is in the US interest that this happens, and that the growths of 2% that we saw and 3.5% and 4% over the last few years will diminish down to between maybe 0.5% and 1% going forward, if only because of this reason, that the consumer really has spent their money, and there's no assets now apart. The housing asset has disappeared. The mortgage equity withdrawal is going to disappear, and I guess the only thing left would be a decent equity market. And if that were to drop, then really I think the consumer would have nothing left to spend. So in some ways it's a good thing, obviously not for the job losses, for people losing jobs, but certainly for the US going forward in terms of righting the imbalances that we've seen build up in the last 5 years.
So what's your thought here as we head sort of out of winter into spring and summer and beyond? How are you committing your money at the moment?
Well, we still have investments in these commodity-related agricultural products, which Christine referred to earlier on. That story, although it's headline news almost on a weekly and daily basis, I think is still going to continue. The demographics are, if you look at the UN numbers, they expect the population to increase by 1.9 billion by 2030. And if you look at the government-sponsored ethanol programs or biofuel programs, that is taking arable land out of food production to supply agricultural products for energy. And that's a huge outtake. It could be between 20 and 30% of US arable land that's devoted to ethanol if the government continue with their current policies in the US.
Dariusz, Brian Shackman here. I wanted to put to you, we talked about inflation and the relationship there with the consumer and with the markets, but let's bring in the next big central bank decision, at least from my perspective, will be the US Fed. What's your sense of what they're going to do now? It seems that expectations for a big cut get less and less here as inflation becomes more and more of a headwind. What's your take on what the Fed's going to do?
We expect another rate cut, but only by 25 basis points, which is in line with the reduced market consensus, and this would probably complete the easing cycle. The Fed needs to cut to take out extra insurance against potential further downside to growth outlook, but on the other hand, like you mentioned, inflation doesn't seem to be deteriorating, and the stress in the financial system has subsided. So the past cuts will pretty much almost suffice. So I think that there will be just one more rate cut, 25 basis points. It's in the market, so I don't think it will have any major impact or any asset class.
Dariusz, Christine here again from your notes. I see that you're buying China. This particular market is off actually more than 30% from its peak. You think we might have reached a bottom here?
It's very difficult to pinpoint a bottom, but I think that it's a very good point to buy. At the low this morning, the Shanghai Composite Index was almost exactly half of the value at which it peaked in October last year. And I think a lot of the bad news is already priced in particular any further tightening of monetary policy and administrative measures. So I think that right now would be about a good time to buy. And the key point also here is that, contrary to some commentary recently, the government, I think, will not want to allow any further declines out of concerns what investors would do, that there could be some protests, and they would definitely want to avoid that.
Falling back on the go. Dariusz, great talking to you. Thank you very much for being with us. Dariusz Kowalczyk, Chief Investment Strategist, CFC Seymour Limited. And thank you very much as well, Kevin. Kevin Sullivan, Head of Portfolio Management, Clarendon Liu. Ross.
Right.